Welcome to EPK Capital. We simplify investment and wealth management so you can build wealth for generations. The markets are a sea of red. Your portfolio is down. Your stomach is in knots. That little voice in your head isn't just whispering, it's screaming, "Get out now." Watching your hard-earned money disappear, even if it's just on paper, is terrifying. Your feelings are valid. The impulse to sell everything, to just make the pain stop, is overwhelming. Today, I'll explain why you feel that way and provide a proven framework to fight that impulse. What you do now will be the critical difference between destroying your wealth and truly building it for the future. This powerful impulse has a specific name: panic selling. It's defined as selling investments based on raw fear and short-term market movements, rather than a rational change in your long-term strategy. It's incredibly destructive because it's a devastating double mistake, significantly impacting your financial future. First, you irrevocably lock in your losses. That temporary paper loss, the moment you hit sell, you make it permanent and real. You've guaranteed you won't get that money back. But the second part is even more painful. You completely miss the inevitable recovery. The market's best days, those explosive rebounds, almost always happen immediately after its worst days. If you're on the sidelines, you've already missed the entire rebound. You've sold at the bottom and are now locked out of the gains. So if it's such a bad idea, why does it feel so right in the moment of crisis? Because your brain isn't designed to be a good investor. It's designed to keep you alive and safe. In a financial crisis, that primal wiring unfortunately backfires. There are 3 powerful psychological biases actively working against you right now. First, we have herd mentality. We are social creatures. When the herd runs for the exit, our survival instinct screams to run with them. That instinct once saved us from lions, but it's disastrous in the stock market. In investing, the herd is almost always wrong at the extreme points. Second, there is loss aversion. Psychologists have proven that the pain of a $1,000 loss feels about twice as strong as the pleasure of a $1,000 gain. Your brain is designed to overreact intensely to red numbers. It's not a weakness, it's human nature. And third, we encounter the availability heuristic. The news constantly blares crash. Your social media is full of panic. Your brain assumes this loud, terrifying information is the most important, forgetting 100 years of quiet, steady market history. So let's actively fight that heuristic. Let's zoom out, far, far out. Look closely at this chart. This is the true, long-term story of the market's journey. Now let's look even closer. Here, and here, and here. Every single one of these terrifying drops was, in hindsight, merely a temporary blip. Every single one was a phenomenal buying opportunity for astute investors. Listen closely. Market crashes are not a bug in the system. They are a fundamental feature. They are the normal, painful, but predictable price of admission for consistently getting long-term returns. Economies inherently move in cycles. This current moment, as scary as it feels, is just one natural part of that larger, ongoing cycle. So, how do you behave during these times? How do you move from paralyzing fear to clear logic? You absolutely need an anti-panic toolkit. Here are 4 concrete, actionable steps you can immediately take. Step 1. Have a plan. The best time to build an ark is before it rains. Your ark is your comprehensive investment plan. Why did you invest? Do you know your time horizon? Your risk tolerance? If you have a written plan, you simply follow it. Step 2. Know what you own. This is critical for your peace of mind. Are you invested in flimsy story stocks with no profits? Or do you own shares in real, profitable companies that make things people buy every day? If you truly own good, solid businesses, why would you sell them at a 30% discount just because others are scared and panicking? Step 3. Automate and ignore. Set up automatic investments to occur regularly. Buy $200, $500, or whatever you can afford every month, without fail. This is dollar cost averaging, forcing you to buy more shares when cheap. Then, delete the stock app from your phone. Log out. Stop looking at it daily. Step 4. Do a fear test. When panic rises, ask yourself, has my long-term financial goal actually changed? Are you suddenly not retiring in 20 years? Did you suddenly not need that down payment in 10 years? If your fundamental goals haven't changed, your carefully considered strategy shouldn't either. A market crash is a terrible thing to waste. It is the single greatest moment when vast fortunes are transferred from the panicked to the patient and disciplined. This is the ultimate test you must pass to truly earn your long-term returns. Your brain will try to lie to you with its primal instincts. Sensational headlines will try to scare you into rash decisions. Your job is to have a solid plan, stick to it, and patiently let time do the heavy lifting. Now, if you're still anxious about your portfolio's current state, don't sit there paralyzed in fear. The best cure for anxiety is always decisive action. My next video will be on what to actually BUY during a market crash. It will show you how to identify quality businesses when they go on sale at a discount. Make sure you subscribe to our channel and click that notification bell so you don't miss it. Be patient, stay the course, and build your wealth.